And look, in the interim, let's just go and carry on. Let's keep the monetary policy discussion going at the moment here. Of course, I was having a chat about the RBA before. Of course, running a tight rate at the moment, managing economic activity, high inflation, without going and topping the economy with it. Anthony Landahl now joining us live via Skype to discuss. Anthony, welcome back to the show, and good to go and see you there. The RBA review, I know from a policy setting perspective, in the here and now it's not going to mean much, but down the line it will. What are you expecting to come out of it?
Yeah, I think it's a really good question, whether the review is warranted. Obviously, there's the backdrop of the RBA now on catch up with the inflationary rates. But I think in overview, if they keep it objective, the main areas they're going to look at is around the governance and also around the accountability and their decision-making process. Most central banks around the world have ongoing internal and external reviews, and Australia, our RBA hasn't had a fuller review since the 1981 Campbell Committee, and the governance policy that's in place, where essentially the CEO and the chairman are one in the same, is back from 1959. So it could be argued that that does need some refreshing. So the timing of a review is interesting with the backdrop of recent activity, but I think as an ongoing process around governance, structure, decision making, the appointments to the board, I think it can only be a good thing for Australia and monetary policy, as long as it remains objective, as long as monetary policy remains independent from government as well.
Yeah, that's a really important point as well, in light of some comments from the Prime Minister made yesterday. We won't go into that in any more detail, but yeah, the independence is really key. Anthony, now, the here and now, we keep talking about supersized rate hikes, and the ANZ Bank coming out with a forecast expecting 50-50 to go and end off the year from the RBA, taking that cash rate to over 3%. Really punchy kind of levels coming through there. What's that doing when it comes to demand for finance?
Yeah, it's very punchy, and I think one of the biggest things, and at risk of people taking pot shots at the RBA, has been the rate of increase in rates and the preparedness of people. I think in general most households expected rates to go up. I don't think anyone expected them to go up with such rapidity, especially with the governor not that long ago talking about rates being set to 2024. So there's been a massive shift in behaviour and what's going on. How's that impacting lending? Look, we are genuinely seeing a bit of a slowdown. We're seeing a shift. Investor lending is up. There is a bit of a lag in the numbers, but what we're seeing is lower clearance rates at auctions. They're down about 20% on last year. Houses are on the market longer. Last year's average about 12 months ago was 20 days. Now it's up to 30 days. And the volumes are starting to trend down. Affordability is becoming an issue. People can't borrow as much as the rates go up. And there's a lot of uncertainty. As you hinted at there, the ANZ came out saying there might be another 4 rises before the end of the year. The governor obviously yesterday indicating that neutral place might be around 2.5%, but we're definitely in line for another couple of rapid rises. A lot of people are sitting on their hands, I believe, for this next quarter to see what happens through to Christmas. It's starting to reflect in the data.
We know that individual lenders all have their policies when it comes to the amount that can be borrowed. Just give us an instance about how much we've seen the reduction in borrowing capacity as rates have started to rise recently.
Yeah, sure. So someone who might have been borrowing $1 million, which is quite a large number, but hypothetically, someone who might have been borrowing $1 million 6 months ago, that might be down to $900,000, $950,000. So their serviceability is being impacted. That then flows through to what they can afford. We're not seeing a big shift in policy so much as the increased rates affecting what people are wanting to do. So someone who might have been able to secure some funds for a refinance or secure funds for a purchase or for renovations, for example, are being affected because they can't borrow as much as they wanted. It can be up to $50,000 or $100,000. Which is a lot of money, depending on the sort of brackets they were in.
Absolutely. One thing I want to go and ask you about as well, we know that in previous years, first home buyers, there was an influx of people entering the market. What have we seen in that space now? Has there been a cooling off of appetite?
Well, good thing for first home buyers is there's been a release of more places in the first home loan deposit scheme. That's good news for first home buyers. Other good news is the market is cooling. There's some parity coming back in. Purchasers are back with some buying power at the table. there's some upsides for first home buyers. So there are some first home buyers still out there looking. The downside for first home buyers is they were already struggling with affordability, and the impact of the increase on rates is impacting how much they can borrow. So I think a lot of first home buyers borrowed to their maximum 6 or 12 months ago. They fixed in low rates. There's going to be a bit of a lag on those existing customers when those fixed rates come off and the impact of these rises. But new home buyers are adjusting to the market. The good news for the first home buyers is there was another 40,000 odd places in the first home loan deposit scheme. One of the biggest challenges for them being their deposit as of the 1st of July. So they're out there and active with the market softening.
Yeah, interesting as well. Of course, there's also some speculation. We're going to go and see easier access to skilled migration as well. Some measures to go and try and help boost that side of the economy as well. So maybe a positive as well for the housing market coming through. Anthony, we have to go and leave it there, but thanks for joining us here on Ausbiz. We'll speak soon, mate.
No worries, mate. Cheers.